Okay, let's take that, some of those numbers to the marketplace, and where we're having some conversations right now with Tola Abimbola, who is one of the investment analysts at Afrinvest. Is live to us from the home of the markets. That's Lagos, our headquarters. Tola, it's good to see you. Good morning.
My pleasure. Good morning, Boston.
Thank you. It's good to see you. The news we're having going into the weekend was that the Monetary Policy Committee will not hold Monday and Tuesday. Take this from me here. This MPC meeting is not going to take place despite the rally that we're seeing in the marketplace. What's your take?
Well, it's quite an unfortunate event, given that for analysts and investors, the MPC meeting would have been an opportunity for us to get the direction of monetary policy in the new year and get the thoughts and the thinking behind monetary policy in the MPC. However, the markets appears to be unfazed by the developments, as you would see that in the equity market, sentiment are still quite strong. And even in the fixed income market, we are still seeing a downward pressure on yields. Already week to date, we have seen a decline of 4 basis points across the bond yield curve to around 13.6% now on average for bonds. For the equity markets, we are up over 4% already this week. So despite that developments, the market is taking it in a chain, and we are not seeing any negative consequence yet. The reason perhaps is because if you look at monetary policy in the last 2 years, you would discover that the instruments, the policy tools being deliberated upon at the MPC meetings rather, they haven't really been so much instrumental in the direction of markets. Rather, the CBN has been utilizing the OMO tool, that is the frequency of OMO auctions and the clearing rates at OMO auctions, as the main policy instrument to guide direction of markets. So for us, for investors in the markets, what they will be looking forward to is to see the clearing rates at subsequent OMO auctions set by the CBN, as well as the frequency of these mop-ups to gain a better direction of monetary policy in the year. But of course, we saw the CBN governor come out earlier in the week to sort of calm nerves, and he guided that even if the meeting held, they wouldn't tinker with the monetary policy rates, given that we are just entering into the new year, and they would like to see developments in the regarding price level, you know, to further confirm the need for them to begin the easing cycle.
Yes, so the market may decide to ignore Godwin Emefiele and the rest of his team at the MPC, but the broader economy, the fiscal authorities need to hear from the central bank, where they've got to talk about the global economic space. Those communique always touch on the macroeconomic environment, money supply, M1, M2, whatever you call it. At the end of the day, there's a bit of a guidance there for the Ministry of Finance, for the planning, for guys in economic planning, budget, perhaps the National Assembly and whatever, as to what this team of MPC, those who are in CBN, those who are independent members of the board, what are their thoughts about where the economy was coming from, reading the jobs data, inflation, perhaps outlook on GDP, PMI, for example, the SMIs and other core economic data. So the markets may not really need Emefiele at this point in time, so thank you, we can do without you. But the broad economy needs to hear from this MPC.
Yes, I do agree with you, certainly. Also because the fact that we are not holding the MPC meeting because of political gridlock, it sends a negative signal to the markets and to foreign investors as well, that the country's policymakers, they are not organizing their priorities, you know, and focusing on the right things needed to ensure that there is enough certainty in policy making. So for the foreign investors who are thinking of the Nigerian markets, of course, there is a reputational, you know, damage, you know, that the lack of MPC meeting will probably, you know, have an impact on. For the markets, however, and of course for the fiscal authorities as well as the broader economy, the MPC meeting would have afforded them the opportunity to understand the direction of monetary policy in 2018. 2017, we saw, you know, growth return to the economy in Q2. Inflation rate disappointed for much of the year, but of course, we saw a downward trend, a deceleration in inflation rates to around 15.8% and 15.4% rather. And going into the new year, it would have been appropriate to understand the threshold that the MPC will be looking forward to before they decide on cutting interest rates. Before the tightening cycle began in 2016, the argument the MPC was making persistently was that the major anchor for monetary policy is price stability and also exchange rate stability. So now that we are seeing exchange rate stability, thanks to higher oil prices and stronger oil production, which have increased the volume of intervention by the central bank in the interbank window, as well as the improvement in investor sentiment, which has trickled into higher portfolio flows in the markets. We have seen exchange rate stability. For price stability, like I mentioned initially, we saw some disappointments in inflation figures in 2017, because if you compare the actual inflation numbers to analyst consensus forecast, it was a bit underwhelming. But again, we have to take the positives. There was a deceleration, and it looks as if that will continue into the new year because of the high base effects. So stars are aligning in terms of exchange rate stability and price stability. And this meeting, which we don't be holding, unfortunately, would have been an opportunity for the markets to probably ask the central bank governor, as well as the rest of the MPC committee members, that what threshold are you looking at before you begin, cutting interest rates. But we'll see what happens in February.
Okay, we'll see what happens eventually. We got those sources yesterday, competent sources telling China's television that the central bank will make a formal statement as to why this meeting has been suspended and how to calm the markets and investors and everyone on Monday. We expect that to come in on Monday, a formal statement from the Central Bank of Nigeria, which, of course, everyone will get. Of course, the meetings should start on Monday, so I think the Central Bank decided to issue that statement on Monday, not before. We were expecting that today, but that will come through on Monday. Thank you very much. Final part of the program for today and for this business week. Tola Abimbola, investment analyst at Afrinvest, managed to keep him behind. He kicked off the program, then he's wrapping it up for us today. What a privilege you have there, Tola. I know you folks are busy to get your Afrinvest market economic outlook report launched by next week, Tuesday. We're taking a good look at that. I'm sure it's been a very busy few weeks, first 2 weeks of January with you folks, so we appreciate your time sticking around in the studio doing television interview at this point in time. So what's your outlook for the market next week? We've seen a very, for the remainder of January, technically we have less than 1.5 weeks to wrap up the month.
Well, we expect sentiments to remain positive next week. Of course, we do not expect the pace of gain to be sustained into the new week because last week the market was up by over 10%, which was the highest in the last 20 months. This week we're already up around 4.5% or thereabouts. But if you look at the markets yesterday, there was a bit of profit taking on some large cap stocks, but demand was still quite strong for the small caps, particularly in the banking sector and also a bit in the consumer goods and even the industrial goods sectors as well. Going into the new week, we still expect demand to remain strong for the small caps because of the repricing going on there by foreign investors who are looking to rotate part of their portfolio into the Nigerian markets once again due to the improving economic fundamentals. However, like I mentioned initially, the pace of gain should slow because if you are looking at the valuation multiples of the companies in the Nigerian markets right now, the multiples are looking they're looking a bit overstretched, and of course there are concerns from some quarters that there is perhaps a bit of exuberance in the markets. We do not think so. We still think that the market still has some upside for further gains. However, the pace of acceleration should moderate as we see investors profit away the upside potential for most of the stocks in the markets.
But if the market is going to have a bit of a slowdown, how much of a slowdown are you looking at, Tola?
For us, we are looking at probably perhaps gains moderating back to the normal average of between 1% and 2% in a typical cycle. Last week was a very huge bull run, and of course, anybody with the knowledge of market cycles would understand that the market does not typically record such a quantum of gains every week. So typically, we should expect pace of weekly gain to reduce to the lower 1% to 2% region going forward, and we expect the small caps to remain a major driver of the gains. For the large caps, they've been clearly defensive in the weak economic cycle, but their valuation multiples now already look very close to the pre-crisis level. So perhaps the upside potential there is not so much again. But for the small caps, I think there is still a bit of more upside for investors to take advantage of.
Yeah, for the small caps, I'm sure everyone will be looking at where to still make money, even though the market may decide to slow down. Any major economic activity or business activity that you think could shape the market as we try to wrap up the first month of the year? Anything on your horizon?
Not really for now. But if you are taking a consensus view of the market analyst today, the major downside risks to the positive market cycle we're experiencing right now is, of course, the political risk, which would probably crystallize around the second half of 2018. So it looks as if the coast would remain, clear, at least for the first few months of the year. But as we approach the second half of the year, we should expect some marginal correction in the markets as some traders, try to reduce their position, their exposure to Nigeria, due to the typical volatility we experience during election cycles in virtually all the frontier markets.
Okay, Tola Abimbola, thank you very much for holding the beginning and the end of the market of the show for us today from investment analyst from Afrinvest. See you next week. And thank you everyone for watching. This is Business Morning Today, live from Abuja, Nigeria's political capital. It's Friday and I'm going home. I'll see you again from Lagos, the home of business, economy and the markets, from Monday. That's where I work, live and play. Thanks for hosting me for 2 days in Abuja, everyone. Bye for now.